Hello friends, welcome to Letstute Accountancy. So today we are starting with the question number 2 of death of a partner. We already did question 1, so you can refer that question first and then you can start with question number 2. Jack, John and Sean were partners in a business, sharing profits and losses in the ratio 2:2:1 respectively. Their balance sheet as on 31st December 2018 was as under: capital account of Jack, John and Sean, general reserve, creditors, outstanding expenses, machinery, furniture, stock, debtors and cash. Sean died on 31st March 2019. So now this balance sheet was up to 31st December 2018 and this Mr. Sean died on 31st March. So that is after 3 months from this balance sheet date. Machinery was to be revalued to 60,000 and furniture to 18,000. A provision for 5,000 was made for taxation. The drawings of Sean up to the date of death amounted to 8,000. Interest on capital was to be allowed at 10% per annum. Interest on drawings was to be charged at 100. His share of goodwill amounted to 10,000. His share of profits from the closing of last financial year to the date of death amounted to 4,000. Sean's executor was paid 4,000 on 1st April 2019 and the balance in 4 equal yearly installments starting from 31st March 2020 with interest at 6% per annum. We are required to prepare profit and loss adjustment account, so that is as good as revaluation account. Revaluation account is also known as profit and loss adjustment account. Sean's capital account showing the amount payable to his executor. So over here we are not required to prepare partner's capital account for all the 3 partners. We just need to prepare partner account for this Mr. Sean. And Sean's executor account till it is finally paid. So now this is a different thing. Generally in the sums of admission, retirement, that they ask revaluation account, that is profit and loss adjustment account. They ask partners capital account. If there is any current account, they ask partners current account. And then they ask balance sheet after the admission or retirement or death. In first question also, they had asked new balance sheet after the death of a partner. But over here, they have not asked you to prepare balance sheet. Even they have not asked you to prepare partners capital for the continuing partners. They have just asked you to prepare Sean's capital account and Sean's executor account. Now this is to be prepared till it is finally paid off. So till it is paid off, not only till the date of death, because on the date of death, whatever the amount payable to Sean, that amount will be transferred to Sean's executor account because Sean died on 31st March. So from 1st April 2019, whatever the amount is payable to Sean, Mr. Partner Sean, it would be transferred to Sean's executor account. And you need to prepare his account till it is finally paid. So it was paid like 4,000 on 1st April and then 4 annual installments from 31st March 2020. So we need to prepare his account for 4 years till it is finally paid off. So this is the question. Make sure when you read the question, you read it very carefully so that you get the entire picture, what is given in the question, what is to be prepared for the question. Now we'll start solving it. We have prepared profit and loss adjustment account. We have prepared Sean's capital account, only one partner's capital, and then we also have prepared Sean's executor account. Over here we are required to prepare date column also, since there is a payment to Sean's executor in 4 installments and we need to prepare that account for 4 years. I have prepared date column also. Now when we start posting the items and we'll start giving the adjustment. First of all, if we think about the balance sheet, there is no capital account for Jack and John, but we have a capital account of Sean. So first Sean's capital will go to Sean's capital opening balance. Since it is on a liability side, it would be credit balance. By balance brought down. And Sean's capital is 20,000. Then we have general reserve. Now this we have seen in many sums that if there is any accumulated profits, reserves or losses, that is to be shared between all the partners because this belongs to Jack, John and Sean, all the 3 partners. So we need to distribute this general reserve. What would be the journal entry for this? Since this is a credit balance, we need to debit it. So our entry would be general reserve account debit to Jack's capital, to John's capital, to Sean's capital, that is to partner's capital account. Over here we have only one partner, that is Sean. So we'll say by general reserve account, and this general reserve would be shared in their profit sharing ratio. So this is 5,000 and the profit sharing ratio is 2:2:1. So Shan's share is 1/5. So this would be 1,000. Then we have creditors. Creditors goes to balance sheet. Outstanding expense will also go to new balance sheet. All the assets will also go to new balance sheet subject to the adjustment. We'll give the effects for this adjustment. Now Shan died on 31st March. Do remember that from 31st December till 31st March we need to give profit share also to Mr. Shan because he was there as a partner for this 3 months, and that information is also given to you in adjustment number 7. So that will deal when we do all the adjustments. Now first, machinery is to be revalued to 60,000. We have machinery valued 50,000, that is the book value is 50,000, and it is revalued at 60,000. So it is increasing. Now if you want to increase the asset, we'll debit that asset account. So our entry would be machinery account debit to revaluation account, or we can say profit and loss adjustment account. So this is the gain for us. So we'll credit it by machinery account, and this is 60,000 minus 50,000. Do not increase by 60,000. It is revalued to 60,000. So we need to increase only by 10,000. So by machinery account 10,000. Then we have furniture to 18,000. We have furniture of 20,000 and it is revalued to 18,000. So we need to reduce the value of furniture. So that is a loss for us. It would be debited to P&L adjustment account. So our entry would be P&L adjustment account debit to furniture account, and it would be reduced by 2,000. Next, a provision of 5,000 was made for taxation. Now if you see the liabilities, we do not have any provision for tax. So this is kind of an unrecorded liability which was not there in your books, but now you need to raise this liability in your books. So if you want to raise the liability, we need to credit that liability account, and since your liabilities increases, it's a kind of a loss for us. So that would be debited to P&L adjustment account. So we'll say to provision for taxation account, and we need to create liability for 5,000. So that is also done. The effects for this machinery, furniture and this provision for taxation will go to new balance sheet, which is not required over here. Then the drawings of Shan up to the date of death. Now this balance of 20,000 is on 31st December 2018, and he died on 31st March. So for this 3 months they have given us some transaction, out of which the first one is there was a drawings up to the date of death is 8,000. So we need to debit that drawings into capital account. So to drawings account, the amount is 8,000. Then we also required to give interest on capital at 10% per annum. So interest on capital would be credited by interest on capital account. Now the capital of the partner is 20,000. It is generally given on the opening capital into the rate of capital is 10% per annum, but this is per annum and this period is 31st December to 31st March, 3 months. So this would be 3 by 12. So that is 20,000 into 10% into 3 divided by 12. So that comes to 500. Then we have interest on drawings to be charged at 100. So that would be debited to interest on drawings account, and the amount directly given at 100. Now his share of goodwill amounted to 10,000. So over here we are not required to do any valuation of the goodwill, because directly goodwill's share, Shan's share of goodwill is given at 10,000. So we'll give credit for that goodwill to Shan. So by goodwill account 10,000. So by goodwill account 10,000. Then his share of profits from closing of last financial year to the date of death amounted to 4,000. So that I told you from 31st December, that is 1st January to the 31st March, for 3 months we need to give profit share to Mr. Shan, and they have directly given us his share of profit. So this 4,000 entirely belongs to Mr. Shan. Like in the previous question, we had find out for this profit share, we had find out average profit for 3 months. Then that give you the appropriate or proportionate profit for that period. Then we found out the period profit for the period up to the date of death of a partner, and then we found out the share of the outgoing partner or the deceased partner, but over here directly the share is given. So we'll say the entry would be for the entry for this share of profit, the entry is P&L suspense account debit to partner's capital account. So by P&L suspense account, since profit share is given, it would be credited 4,000. So that is also directly given. Now Shan's executor was paid 4,000 on 1st April. So now this all relates to Shan's executor. For that, first of all, we need to close Shan's capital account, transfer the balance due to Mr. Shan to Shan's executor account, and then we'll talk about how the payment is made to Shan's executor with the interest charge at 6% per annum. So first you close Shan's capital account, but before closing Shan's capital account, we need to close P&L adjustment account, because whatever the profit or loss of this P&L adjustment will be shared by all the 3 partners. So the share will be given to Mr. Shan also. So first close this account. So this is 10,000. We have a credit balance. 10,000 minus 7,000. So this is 3,000. So that is to be shared between Shan, John and Jack to partners capital account in their profit sharing ratio. This is your profit on revaluation. So 3,000 divided by, so this is 2:2:1, 5. So that comes to 600 into 2. That comes to 1,200 and 600. Give this share to Shan by profit and loss adjustment account, and their share comes to 600. Now we can close Shan's capital because we have done all the adjustment related to partners capital. So close this account and find out the balance due to Shan, which would be transferred to Shan's executor account. So this is 20,000 plus 1,000 plus 500 plus 10,000 plus 4,000 plus 600. So that is 36,100 minus 8,000 minus 100. So that comes to 28,000. So amount due to partner Shan is 28,000, and this would be transferred to his executor's account. So to Shan's executor's account 28,000. So transfer this over here. Now this can be transferred on 31st March, or the payment is made from 1st April. So we can say it can be transferred on 1st April also. Right now, since Shan died on 31st March, I am transferring this balance on 31st March 19 by Shan's capital account. Amount due is 28,000. So over here what we did all the adjustment regarding revaluation for the partner's capital, for goodwill, for share of profit, and then we found out for P&L adjustment profit, and that profit is transferred to partner's capital. Over here we can write as profit, and then close partner's capital. And since that partner died on 31st March, his amount due will be transferred to his executor's account. So that is transferred to Shan's executor account. Now next, Shan's executor was paid 4,000 on 1st April 2019 and balance in 4 equal yearly installment from 31st March 20 with interest at 6% per annum. Now just for our reference, I have prepared a working note like a timeline. It is not compulsory to prepare timeline. You can directly solve the question, but just for your understanding, I have prepared this line. Now on 31st March 2019, the amount due was 28,000, and on 1st April, so that is on the same day, we can say on 1st April 19, we paid 4,000. So 4,000 was paid, and the balance in 4 yearly installments, equal yearly installments. So 28,000 minus 4,000, outstanding amount is 24,000 divided by 4 installments. So 4 installments are divided by 4, so that would be 6,000 each. So that is to be paid from 31st March 20. So first installment would be 31st March 2020. I can say minus 6,000. Then 31st March 20 minus 6,000. 31st March 22 minus 6,000. And 31st March 23 minus 6,000. So these are my 4 equal installment of 6,000 each. So that comes to the total payment of 28,000 with interest at 6% per annum. So we also need to give interest at 6% per annum, but over here the year end of the firm is 31st December 80 and the repayment is happening on 31st March 20. But if the year end is 31st December, you always need to close your books on 31st December. So I can say my first year end will come over here. That would be 31st December 2019. Then 31st December 2020, 31st December 21 and 31st December 22. On 31st March 23 the amount is entirely repaid, so we need not go to there. So these are the year end, 4 year ends in between. And then if there is a year end, then we need to give interest for that proportionate period also, because we calculate interest on time basis. So though we are going to pay this interest for this entire period, for that 12 months on 31st March 20 itself, but we need to record interest on 31st December 19 for this 9 months, like from 1st April to 31st December. This are the period of 9 months. So we need to calculate interest for 9 months, and then in this next year this interest will be calculated for 3 months, and that entire 12 months interest will be paid on 31st March 20 with the installment amount. So we'll pay 6,000 plus interest. Similarly on 31st March 21 also we'll pay 6,000, that is toward the principal outstanding, plus interest. Over here also plus interest, plus interest. So generally what mistake we make, we directly calculate interest on 31st March 20, but if there is a year end and interest is accrued for 9 months, we follow accrual basis of accounting. So if the interest is accrued, even if it is not paid, you have to record your interest expense, just like say for example for salary. Generally salary for a month is paid in the next month. So if we say if it is 31st March and the salary paid on 5th of April, we still record salary outstanding in our books and we record that salary expense, though it is not paid, because we are going with the accrual basis. Over here also, since there is a year end, we need to record interest for this 9 months, though it is not paid, but it has been accrued and you need to record that interest. Again I am writing over here, out of 28,000, if 4,000 is paid, our outstanding amount would be 24,000 for this period till this 6,000 is paid. Now out of 24,000, if 6,000 is paid, our outstanding amount would be 18,000. Out of 18, again if 6,000 is paid, it would be 12,000. And out of 12, if 6,000 is paid, outstanding would be 6,000. And remaining 6,000 is paid on 31st March 23, then there would be no outstanding amount. You need to calculate interest proportionately. Again this would be for 9 months, this would be for 3 months, 9 months, 3 months, 9 months, 3 months. So now we'll start recording the transactions. First of all, on 1st April 2019 we paid the 4,000 amount to Shan's Executor. So our entry would be Shan's Executor account debit to cash bank account. So on 1st April 2019 to, either you can write as cash bank account or you can directly write as bank account. So I'm directly writing as to bank account 4,000. Then we need to calculate interest for this 9 months. So since interest is due, that is our expense which is to be paid to Shan's Executor. So our entry would be debit the expenses, interest account debit to party account, so to Executor's account on 31st December 2019. So on 31st December 19 by interest account. Now this interest will be calculated on the outstanding amount. Do not calculate on 28,000, because out of 28 we have already paid 4,000. So outstanding is 24,000. So this would be 24,000 into rate of interest is 6% per annum. 6% into this period is from 1st April to 31st December, it is 9 months. So into 9 by 12. So 24,000 into 6% into 9 divided by 12. So that comes to 1080. And since there is a year end, we need to close the book. So this is 29,080, 29,080 minus 4,000. So this is 25,080 to balance carried down on 31st December 90. Now this balance would be brought down over here on 1/1/2020 by balance brought down 25,080. Then for this 3 months, first of all we need to book the interest and then we'll pass the entry for this installment payment, because this installment will consist of interest for 12 months and right now we have recorded interest only for 9 months. So first of all, from 1st January till 31st March, record the interest expense. So by interest account on 31st March 20. Now over here, this interest will be calculated on which amount? By mistakenly, do not take on this 25,080 because this contains interest also. This is not your compound interest. If it would have been compound interest, then we calculate interest on interest or anything. But over here, it is normal simple interest. It would be calculated on the outstanding amount. So again, this would be calculated on 24,000 into 6% into 3/12. So if you see the combined effect, we have calculated interest on outstanding due of 24,000 at 6% into 12/12. So that is for the entire year. So that is calculated for 12 months itself. It's just there was a year end in between. So we had to close our books and we need to find out 9 months interest and 3 months interest. If our year end would have been 31st March itself, then there would be no tension. Directly calculate interest for 12 months, pay the installment. Calculate interest for 12 months, pay the installment. So please see the year end date and the payment date very carefully. So now this would be 24,000 into 6% into 3/12. So that comes to 360. And on that date, we'll pay the installment 31st March 20 to bank account. Now in the installment, first of all, we'll pay the 6,000 for equal installment plus we'll pay interest. So now interest would be paid for this entire 12 months. So that would be 1080 plus 360. So 6,000 plus 1080 plus 360. So that would be 7440. Now again, we have done this installment payment. Our year end is 31st December 2020. So again, interest for this 9 months we need to due. So 31st December 20 by interest account. Now this interest would be calculated on which amount? On this outstanding amount of 18, because out of 28, 4 paid, outstanding 24, out of 24, 6,000 paid. Now out of 24, do not deduct this 7440 because it includes interest also. So towards principal amount, how much paid? Out of 24, 6,000 paid. So outstanding amount is 18,000. So this would be on 18,000 into 6% into, now this period is 9/2. So over here also you can see the interest total, though this is on 24,000 and this is after payment of first installment 18,000, but we have recorded interest for entire 12 months for that particular 2020 year. So this is 18,000 into 6% into 9 divided by 12. So that comes to 810. And since this is a year end, we need to close the books. So 25,080 plus 360 plus 810. So that is 26,250. 26,250 minus 7440. So outstanding amount 18,810 on 31st December 20 to balance carried down. Now on 1/1/21 by balance brought down 18,810. Now this is on 1st January 2021. So after this, now we need to calculate again interest on this 3 months. So we have reached over here 31st December 20. So again we need to calculate interest for this 3 months and then we'll make the entry for installment. So now this thing will continue for second year also, third year also. So same 31st March 2021 by interest account Amount due is 18,000. Already 9 months interest is booked. So remaining 3 months, 18,000 into 6% into 3 divided by 12. So that comes to 270. We'll make the installment payment 31st March 21 to bank account. 6,000 is the installment plus this interest of 810. 360 is already paid. 810 and then plus this 270. 6,000 plus 810 plus 270. So that comes to 7080. So we have made this installment payment. Then again we need to calculate interest for 9 months because year end is 31st December. So 31st December 21, accrue your interest. So by interest account, now out of 18,000, 6,000 again paid, so outstanding due is 12,000. So 12,000 into 6% into, now this would be 9 by 12 from 1st April to 31st December. So 12,000 into 6% into 9 divided by 12. So that comes to 540. And since this is a year end, close this books. 18,810 plus 270 plus 540. So that comes to 19,620 minus 7080. That comes to 12,540. 31st December 21. Now this would be brought forward on 1st January 22 by balance brought down. This is to balance carried down. 12,540. So this is over here. Now again you need to calculate 12,000 interest for 3 months on 12,000 on 31st March 22 by interest account. This is 12,000 into 6% into 3 by 12. So 12,000 into 6% into 3 divided by 12. So that comes to 180. Make the installment payment 31st March 22 to bank account. 6,000 plus 540 interest plus 180 interest. That is interest on this outstanding 12,000. So 180 plus 540 plus 6,000. So that comes to 6,720. Again accrue your interest on 31st December 22 by interest account. Now this interest would be on last outstanding amount of 6,000. So 6,000, because out of 12, 6,000 is paid. 6,000 into 6% into 9 by 12. 1,000 into 6% into 9 divided by 12. So that is 270. And this balance would be carried forward 31st December 22 to balance carried down. 12,540 plus 180 plus 270. So that is 12,990 minus 6,720. So that is 6,270 on 1,123 by balance brought down 6,270. Then last, now we have brought down this balance on 1/1/2023, and now for this remaining 3 months, because last installment paid is 31st March 23. So by interest account, 6,000 into 6% into 3 by 12. So on 6,000, 9 months interest is already calculated. So this is for 3 months. So 6,000 into 6% into 3 divided by 12. So that comes to 90, and make the installment payment 31st March 2023 to bank account. Last installment of 6,000. So see, 6,000, 1, 2, 3, 4. So 4 equal installment plus this 4,000 was paid on the first day itself. So 6,000 plus 270 plus 90. 6,000 plus 270 plus 90. So 6,360. And when you tally this, your account will close. This is 6,360 and this is 6,270 plus 90. that is 6360, and you have done with all the payment to Shan's executor. So that's it. Once you know how the calculation is to be done, then it is same year by year. First we need to accrue the interest, then on the date of installment you need to book the interest for that remaining 3 months, pay the installment. Installment will be principal amount of 6,000 equally that they have specified in the question, plus interest accrued for 12 months. Again accrue the interest for 9 months. Since there is no payment, balance carried down. Accrue the interest for 3 months, pay the installment, then 9 months, balance carried down. 3 months, pay installment, 9 months, balance carried down. Finally, last 3 months interest paid and the installment paid and the executor's account tally. That means we have paid all the dues to Shan's executor account on 31st March 23. So if you see, this was again a very easy question. So death of a partner is, if you can just see, both the questions were very easy, and it is bit similar to retirement of partner also. In the question 1 we have prepared the valuation account, partner's capital account and balance sheet. We had done valuation of goodwill, we had found out the profit or loss for that period till the date of death. Then in this question we found out again revaluation, that is P&L adjustment account. Over here only the deceased partner's capital account, and then this was the new thing in this question where we prepared deceased partner's executor's account and we paid the amount as it was given in the question. So I hope you understood this question. This working note was not compulsory, that is just for our convenience, so you can totally skip this working note in your exam. Thank you.